Hi, this is Russell Gray, co-host of the Real Estate Guys radio show with another edition of Boots on the Ground for August 2020. And today we're going to be talking about short-term rentals. Obviously, in the COVID-19 world, there's all kinds of concerns about sanitation and travel and germs and safety. And it's impacting a lot of people in the hospitality space. And so, you read about things in the paper, and that's interesting. The reason we do Boots on the Ground is we want to talk to people who are actually in the trenches doing the thing on a daily basis in the real world to find out how much sensationalism and hype and hyperbole is built into the headlines, and then what's really happening in the real world. So welcome back, if you would, Tim Hubbard from Rest Methods, short-term rentals. Sorry about that. I'm reading the thing on the back of the wall, and
No, that
I
works.
see the guy sleeping. But anyway, so if I screwed up your brand, I apologize. I just know
No,
you as
Rest
Tim,
Methods,
the
that's it.
short-term rental guy. But Tim, how you doing?
Yeah. I'm doing really well, Russ. Thanks. And
So,
nice
so
to be
what's
back here.
going on out there? What are you experiencing in the real world?
This month, August, and then all of last month, July, we're back to like pre-COVID levels in terms of occupancy. I mean, we were booked up across the board in the three cities that I'm in. So it was really a breath of fresh air. We had, April and May were the slowest, but as we mentioned last time, that was only for some of the properties. So it was interesting, but now all the properties are back to pre-COVID levels. So it's been really good.
Okay, so now did you change what you were doing? Can you attribute maybe some of the bounce back to adjustments you made in terms of how you were marketing, who you were marketing to, how you were operating, or did you just kind of hunker down, wait till the thing blew over and back to business as usual, no changes?
Yeah, we certainly made some changes. A big one was cancellation policies. So all of our cancellation policies were changed to 24 hours. So someone could cancel last minute, which is, all the travels being booked last minute these days. We just we don't know what's going on. Stuff keeps changing. So that was a big one, and we're keeping it that way. But, in the space that I was in, our average booking was only a couple, 2-3 days out anyways. So that wasn't a big change for us. I could see that having a lot bigger impact on the vacation rental space, but, a traditional vacation rental. But they fared pretty well through a lot of COVID in certain areas because they were more isolated and more quarantined. So things are back. I was reading a study recently that some cities are over their last year revenue. And like Dallas, for example, Dallas and Atlanta were up over what they were last year. And I think part of that probably has to do with the fact that people have just been bottled up for, months, and there's some pent up demand and trying to get out. And so when restrictions lifted, people book things up.
So are you seeing any differences in the demographic in terms of who's coming, why they're coming, and maybe their affluence or sophistication or anything at all? And is it a reflection again of how the market has changed, or did you shift into marketing a different way and maybe attracting a different type of person?
So we did change. We used to not accept local bookings because they tended to have parties and things like that. We changed that very early on, and we had a little lesson learned there. We lowered our prices because things weren't. So we're getting local people at lower prices, and we did have some parties and things. And so we worked past those. We've raised our prices, and we just got more strict with who we allowed to make reservations. But for the most part, it's all, domestic people, but we're getting more people from across the US now, where it was much more local in the kind of the depth of things in April and May. So a lot of local domestic people. The demographic hasn't really changed for us. We're still targeting the same price range, as we were. So that part's pretty much on par with what it was prior to COVID as well. So it's
Okay.
really back to normal for us, except for we're not getting international guests.
Okay. And are the guests demanding or requesting anything different or unusual in terms of, impacting your operations, your preparation of the room turning, anything like that at all? I mean, because obviously there's top line, which is price and occupancy, and then there's bottom line, which is what you make after you provide the service and deal with the maintenance and damage if you have that, and the cost of, client acquisition and processing the transaction and all of that. How do you feel like from a bottom line perspective, what's gone on has impacted you?
We made some cleaning changes where we ordered some different types of chemicals, and we're a little more thorough in our housekeeping. But I in the different cities I'm in, I pay for housekeeping differently. So some places I pay on a per unit basis. That's where I have fewer properties. That hasn't changed. So aside from the difference in the price and supplies, that's negligible. I mean, really hasn't changed. Here in Memphis, where I am right now, where I have the majority of my properties, we pay by the hour. So we hire housekeepers, and we're taking a little more time, but again, I don't think it's a huge impact, maybe 5%. It was very interesting though. We had a tough time finding housekeepers, and you would think that there would be a lot of them, less people are traveling in hotels. So I was kind of at the onset like, oh, we could get a really good team out of this. But what I found, as soon as unemployment ended, we just had a wave of applicants. So now we hired a bunch of new people and we're all good to go, but that's really the only thing I can attribute it to. I mean, it was pretty difficult to find people in that, entry level job position that were making more than they're making now. It's hard
Yeah.
to
So, I
find
mean,
them.
obviously, there were some of the critics of the enhanced unemployment were saying that people would make more money not working than working. Peter Schiff has, been pretty outspoken about that for quite some time. Sounds like you're saying that maybe you saw a little bit of that.
I mean, I don't know what else to attribute it to, but we had a really hard time when the enhanced unemployment was there, and it was much easier, and we're still getting blown up with applications after the fact now. So I don't know what
Okay.
else to attribute it to, but
Yeah. Okay. Well,
it's
good. That's
tough.
interesting. Obviously, I mean, what we care about, I mean, the policymakers aren't calling us up and saying, "Hey guys, what do you think? What should we do?" Right? They're going to do what they're going to do. What we're trying to figure out is what they do. And sometimes you can't listen to what they say. You got to just watch what they do, because their actions speak louder than words. And then ultimately, how's the marketplace going to respond to it, right? And so you have your assumptions about the way the world will be, and that's what happens when we live in a bubble and just read the news. The reason we like to do these boots on the ground interviews is because when we talk to you, then we find out what's really going on in the real world, right? We think it's going to be this way, and then you got in the real world, like, oh, it's that way, and I don't exactly know why, but this is the net of it. And so that's great intelligence. Really appreciate that. So let's just talk a little bit about your outlook before we wrap this thing up.
Sure.
Maybe optimism scale 1 to 10. How were you in the space before COVID-19? And then how are you now? Are you more optimistic, less optimistic, about the same? How do you feel about it, the state of the union right now?
Yeah. Um, I would say I'm probably more optimistic for a couple reasons. One, people, I stayed in a hotel a few weeks ago in Vegas when they had lifted things, and it was kind of weary in there. Tons of people, and there's elevators, and everyone's got masks on and shields everywhere. So the short-term rental space, most of the time they're private properties. They have private entrances. So while we're still coming out of all of this, and cleanliness and hygiene's at the top of our minds, I think a lot of people that maybe hadn't tried short-term rentals will try them. There's also some, when I stayed in that hotel in Vegas, we did self-check-in. It was at the Bellagio. I didn't talk to anyone, and it was self-checkout, which is
Wow.
essentially what I teach with the short-term rentals. So for anyone that hasn't stayed in a short-term rental yet, if they're now staying at some of the world's biggest hotels doing self-check-in, they're going to be more familiar with that, and that might be less of a barrier to try a short-term rental. And then on the supply side, a lot of people, that were either starting out or that weren't serious about it, put long-term tenants in their properties. I know, several dozen here of people I know here in Memphis that did that. So I think on the supply end, there's just less supply, but we're having an equal amount, or if not more, people that want to stay in short-term rentals when they can, when the regulations permit it. So
Yeah, so that's
uh,
interesting. So you maybe you lose a little bit of domestic or international because you don't have guests from out of country, but you're
Hmm.
obviously picking up more locals because you changed your policy. People who
Yeah.
would normally have wanted perhaps to stay in a hotel would be favoring staying in a short-term rental. So you're picking up some business there. And, obviously people have been cooped up for a long time. And if you've just been cooped
Hmm.
up in your house and you want a change of scenery, especially maybe a little bit nicer place to stay in, this is an option just even for a local weekend getaway or even a cross-state getaway. I mean, Memphis
Yeah.
is a fun city, a fun place to visit. Interesting. Okay, well, good. Then I'm glad to hear that you're bullish. I'm glad to hear that
Yeah.
your top and bottom line are going well. I think that bodes well for the space. And so that's really, really encouraging. We just got done doing our crisis investing webinar series, which was several weeks of confronting the brutal facts at the macro level and listening to everybody tell us how all of the macro forces are really headwinds against prosperity. And of course, the way Robert and I look at life is the flip side of all challenges are opportunities. And so, God, there's got to be a pony in here somewhere, even though there's piles of horse manure everywhere. So that's kind of the
Yeah.
way we look
Yeah.
at life. But this is really actually quite refreshing. So, Tim, for people who aren't familiar with you, we've had you on the show a couple of times, but you did a special report for us. It kind of explained the space. Just take a second and tell us a little bit about that report.
Yeah, sure. It basically goes over what I found to be the best returning properties for a short-term rental, how to find them, where they're at, and what things to look for, like regulations. So it's essentially what I use and what I still use to find new properties, and it's in a report that you guys have together.
Okay, and you're still teaching your classes too?
Yeah, I'm exploring other options, virtual options,
Yeah.
and some other courses and things. But definitely, yeah, definitely still teaching and trying to get out a lot of good content for everyone.
Okay. So, for people who, kind of can see the sunshine, there could be an opportunity, especially because some of the competitions come offline because they got scared and locked into long term. But obviously,
Yeah.
short term rental still generates better revenue. You got to work a little bit more for it, like a hotel. But the bottom line is actually quite a bit better. And typically,
Hmm.
you get nicer properties and nicer tenants. So,
Hmm.
okay. Well, all good stuff. Any closing thoughts before we wrap this thing up?
No, I think that kind of sums it up. We're back at good levels here. Some of the dense urban places, LA and Washington D.C. are still down from prior years, but in the areas and the places that I'll recommend in that report, they seem to be faring pretty well and getting better and better. So,
Yeah, well, markets matter. We say that all the time. Okay,
yeah.
super. Well, if anyone's interested in getting the report, I think we'll have a link in the show notes below. But if for some reason it's not there, you can send an email to shortterm@realestateguysradio.com. Shortterm@realestateguysradio.com. It's free. You'll get a copy of it, and it's a great report. We've gotten a lot of good feedback on it. Tim, thanks so much for your time and
Yeah.
the rosy outlook. Looking forward to catching up with you next time.
You too. Thanks, Russ.
All right, take care.